Inheritance tax is a tax on the estate of an individual and it's driven by domicile. Those with a UK domicile will be subject to inheritance tax on their worldwide assets, and those without a UK domicile must only consider inheritance tax on their UK situs assets. Under UK law, domicile is a concept which links an individual to the country in which they have their permanent home. However, this is not necessarily their country of residence, which is often the case for expatriates. There is no inheritance tax payable if the value of the estate is under the available nil rate band, or if the entire estate is left to a UK domiciled spouse. The nil rate band is normally £325,000, and if the nil rate band is not used on death of the first spouse, it can be transferred. Although on second death, there would still be an inheritance tax liability if assets are valued in excess of the available nil rate bands. Inheritance tax is charged at 40% on the part of the estate which exceeds the available nil rate bands. A further complexity occurs when a UK domiciled individual is married to someone who is not UK domiciled, and the UK domiciled spouse passes away first, as there is a limit on the amount of assets that can be transferred free of inheritance tax. There is also an additional allowance available for a property in which the deceased has occupied during their lifetime. Estates valued over £2 million start to lose this allowance, so for those affected, financial advice should be taken to look at the options available to reinstate this allowance. Another crucial planning area for expatriates is life insurance, and whilst life insurance can be invaluable to protect loved ones, it can also be used to pay an inheritance tax liability. It is critical that UK domiciled policyholders hold the insurance inside a trust, or else it will only worsen their inheritance tax problem. There are a number of other reliefs and exemptions available, and it's recommended that you speak to your DeVere advisor to check which reliefs you can make use of, as well as any planning solutions which may mitigate an inheritance tax liability. Your advisor can talk you through the options available to you depending on your circumstances.